Taxes, taxes, taxes. That moment when you finally get your paycheck and take a good long look at how much your hard work has earned you, only to see the numbers dwindle down right after tax deductions. We know it's very frustrating, but it is the law. So what about rich people? They must have a lot more taxes than the average person, but why does it seem as if they're untouched? Besides paying an expensive accountant to identify and minimize their tax deductions, there are a number of ways the wealthy and successful get away with them. Welcome to Luxo-Life, your partner towards personal growth and success. Number 1. They invest and reinvest profits. Did you know that rich people don't actually dive into a bathtub of cash like you've seen in the movies? They don't keep liquid cash for too long unless they need it immediately. So what do they do with all of it? They reinvest most, if not all, their profits, and reinvested profits are never taxed. Let's say your company earns $2 million in annual profit, but you decide to reinvest the entirety of the profits back into your business for expansion. Then you won't be taxed for the $2 million that goes back into your company's funds in full. This is how companies are able to grow rapidly, and as a business owner, you increase your net worth while paying little to no tax. Number 2. They let their businesses pay for everything they need. The government can tax you for what you earn, but they can't tax you for what you spend. Businesses need gadgets such as computers, hardware, smart gadgets, telephones, internet, office utilities, even travel and food expenses. If the company pays for whatever is necessary for the business to function, the expenses can't be taxed. So in essence, if you need a car and the business needs a car for transport, then the company pays for the car that you can use. As a business owner, deduct everything you need from the company's expenses and you'll be taxed less money. Number 3. They benefit from other countries with little to no taxes. Why do tech giants set up companies in the Middle East, Scandinavian countries, Asia, and other islands? Because of some countries and regions' tax-friendly environment. In this way, the companies abroad own intellectual property and are entitled to an annual licensing fee paid by the U.S. company to continuously produce and sell products in the U.S. This accounts for a legitimate expense on the U.S. company and allows it to move money to the company abroad, which has much less tax deductions. Setting up a local company in a low-income tax country and billing your U.S. subsidiary for rendered services allows you to significantly reduce your tax responsibilities in the U.S. Another thing for rich people is that they can maximize their profits by not paying taxes legally in another country such as the United Arab Emirates, the Bahamas, Cayman Islands, and Monaco. While the costs of living are much higher than the rest of the world, such is the advantage of the rich and wealthy. Number 4. They donate money to charity. The top rich people of our world today own charity foundations. Big names like Bill Gates, Warren Buffett, and Jeff Bezos all donate to charity foundations. Why is that? They simply acknowledge the state's lack of creativity when it comes to money, so they decided to take it upon themselves to invest in a positive cause for the community, in which they have full control of their money. Money donated to charity cannot be taxed, and more so, even these foundations require utilities to function, and when the rich donate land, infrastructure, vehicles, or other assets to the foundation, it all counts as a non-taxable charitable contribution. Number 5. They take equity instead of a salary. Equity is a partial stake that the company offers to you, and by taking that share, you are entitled to a percent of the company's long-term profits as well as their risks. One of the significant differences between equity and salary is that salary starts at a base rate, but would eventually have a capping in which the company will no longer pay you above what you're currently worth, while equity continues to earn you money as the company grows bigger and better. Take Elon Musk for example. He is currently the CEO of Tesla, but his cash salary only ranges between $0 to $0. He's only paid via equity, which earns him above $23.5 billion a year. Another one is that a salary has a predetermined income tax, but an equity is only taxable when it's sold and makes a profit. Number 6. They buy valuable art. When it comes to rich people, it's no question that they're fascinated with art and visit auction houses for a chance to buy an exceptionally expensive artwork. Remember, people, one of Mike Winkelmann's art sold for $1 during the early days of NFTs, and one day trader managed to buy that NFT, and the same day she was offered tens of thousands of dollars for the art. By now, that art is probably worth tens of millions. That's exactly why rich people buy rare art pieces. Not only that, say you profited $1 million and buy a piece of art for $1 million. With no income left to tax, you go home tax-free with your purchased art. 5 years later, the art is appraised for $5 million, and instead of selling it for a profit, you donate it to a local museum or even your own art foundation. You ultimately chalked up a $5 million tax deductible, saving an additional $4 million non-taxable income, and that's legitimate business. Number 7. They hold privacy coins. In terms of wealth transfers and asset securities, cryptocurrencies are changing the rules of the game. It's unbelievable that you can carry $1 billion in a USB stick, shove it in your pocket or bag, and use it to board a luxury flight to Singapore, Switzerland, Egypt, and so many more. With strongly controlled currencies like Bitcoin and Ethereum, there are safeguards in place to provide transparency, identify wallet owners, and ensure that everyone is contributing equally. By the way, if you factor in the industry price growth, profits from the sale of cryptocurrencies are only taxed at 10% in the vast majority of nations, which still offers a better return than certain other assets. Bitcoin is entirely legal and is not going away. However, a new generation of technical currencies known as privacy coins has emerged as a result of the popularity of blockchains. These can be fully and anonymously traded, saved, and transferred. Although privacy coins aren't illegal in most countries, other countries aren't fond of them and may restrict their use. The most well-known privacy coins in 2022 are Zcash, Decred, and Monero. The purpose is so that you would be able to spend and transfer your money legally without third-party viewers. Number 8. They don't have cash, but a ton of assets. Perhaps the reason why most wealthy people are cash poor is because they never withdraw money from their businesses. Doing so would cause them to pay taxes on their money, so they leave it alone as assets or stocks. However, there are times when even rich people need quick cash, and that's where the bank comes in. Rich people can easily walk into a bank and say, "I need a loan, check with my accountant and my portfolio." The bank would then peek at the portfolio and give the wealthy party access to the cash anytime they need it. Since the loan isn't their money, they might pay interest for it, but never taxes. This win-win situation can continue for decades if everything is handled by a company rather than an individual. Number 9. They use trusts. If you're wealthy and pass away, the state may tax up to 45% of the fortune you desire to leave your children. This is estate tax. Rich people are utilizing trusts to structure their money in a way that prevents the government from taking it away from them through taxes. It is not yours to pass assets onto your children if you place them in a trust, since they no longer belong to you after certain conditions are met and aren't subject to inheritance tax. However, you can create smart contract-like regulations so that your children can have access to the trust's assets after they meet certain requirements, such as when they turn 21 or finish college. While most people loathe taxes, they are the law, and if disregarded, will lead to massive consequences. What do you think about taxes? Did this video help you learn more and spend less on taxes? Let us know in the comments!